Mike unwittingly put his finger right on the issue we're about to debate, so I'll quote him and play devil's advocate. He says, even if earnings growth continues from here, the market is fully valued. So make the case that you think it's still not and can grow from here.
Yeah, Kelly, I mean, I don't think there's any doubt that the market is very expensive. But as we all know, timing valuation's a terrible timing indicator. And it's not like valuations are any more stretched than they've been over the last few years. So I think ultimately, when you start to see signs that earnings growth is rolling over, you got to start to worry about the valuations, because that tells you there's actually quite a bit of downside for certain areas of the market that are more richly valued. But for the time being, if you have, this stable sort of valuation perspective and earnings growth is broadening out and accelerating, I think that's a pretty supportive environment, which is kind of what you see. You might get some pullbacks, you might get some volatility, but there's still some strong support for markets.
Is earnings growth broadening out and accelerating? Please kind of walk us through, not that we haven't been following quite closely, some of us, Dan, but what do you see? What's going on?
Yeah, I think if you think about, the last, call it 4 quarters or so, it's been a very narrow earnings recovery. So while the S&P earnings growth has been accelerating over that time period, it's really been driven by the mega caps. While the rest of the world and the rest of the S&P 500 actually continued to decelerate over that time period. I think the difference now is that those mega cap earnings growth numbers, while very strong, are actually starting to peak out and roll over. But it's the rest of the market that's going to be driving the acceleration at the S&P 500 level from here. And that's not just here in the S&P 500. You can look outside the S&P 500. Small cap earnings growth looks to be troughing and should be accelerating over the next few quarters very aggressively. And that's also true for earnings outside the U.S., particularly in areas like emerging markets. So you really are starting to see more companies put up better and better earnings growth.
And the Russell is in the green while the Dow is struggling intraday. I want to point out that even though you have a different thesis about the cycle, let's call it, you're still arriving at the same place that maybe Mike or others who are more worried about inflation are, which is energy, materials, industrials, traditional late cycle sectors that tend to benefit from inflationary growth. So everyone in that sense is kind of looking at the same set of facts, I suppose.
Yeah, I think that's right, Kelly. I think either earnings growth is going to roll over, which again, we're not seeing those signs, or earnings growth is actually probably going to stay very strong or even accelerate. And in that type of environment, because we are late in the economic cycle, that simply means that the economy is tight enough to where that better growth is going to come with more inflationary pressure. And so that's not uniformly good and it's not uniformly bad. It just has its winners and losers. So I would err on the side of being in the winners camp with respect to inflation and also nominal growth, and that's the late cycle cyclicals.
So then just remind me, where would that be less favorable? Who might you want to kind of rotate away from?
Yeah, I think we're seeing it right now. I mean, a lot of the companies that have reported within the consumer sector are feeling the bite of higher input costs. So I think, that's an area where you have to be careful. So within the consumer space, and I think that there's other areas out there that just don't have the inflationary hedge. Obviously, if inflation's higher, commodity prices are higher, commodity producing countries will fare better. Commodity producing companies like energy, materials, and industrials will do better. And companies that have a lot of operating leverage and pricing power will do better, such as small caps, I think that's an underappreciated benefit of small caps. People look at small caps as a uniform loser of inflation and higher rates, but I think it's a tug of war, and I think the operating leverage will win as you start to see sales growth accelerate.
Sure, they certainly don't seem to have they're not as tilted towards the consumer. That's an area you and others becoming more concerned about. Dan, love it. Thanks so much for joining us today. Appreciate your time.
Thanks, Kelly. Good to see you.